You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me.
Well, has after Labor Day turned out the way you thought it would?
Well, I don't think anything's really happened yet. We saw the market go up yesterday tremendously. The Dow got up close to around 300 points. Very exciting for people to watch that on their television sets. Today we had another big gap up as there was news that China was about to launch a stimulus program that was supposed to help their stock market and turn their economy that's been in the dumpster and their stock market crashing into nirvana again. But all that seemed to take place was the gap up got sold. But nothing really, I don't think, has happened yet. I mean, these are just 2 days and big swings up and a gap up, then a drop. And these are the short-term action that fascinates us all day by day, and we're seeing bigger and bigger crazy moves now every day. So get used to seeing the Dow up or down 200 points and 500 points we've even seen. We even saw 1,000 points a couple weeks ago. But I think what's more important is putting these crazy moves in context, and that's a simple message, and that is that since 2009, the stock market was in a bull market. It had some corrections in 2010 and 2011, but starting in 2012, it began ascent up in a 45-degree angle without any pullbacks at all. And people became convinced that a pullback would never happen again in the stock market. The stock market even got highly overvalued. Going by the cyclically adjusted P, it only gotten as overvalued as it was recently twice in its prior history, 1929 and 2000. But they said, don't worry about that. The 45-degree angle meant we'll never fall again. And then this year, the market went sideways in a very narrow range, and basically most people, I think, went to sleep because not much was going on. Then suddenly, on August the 20th, the market turned lower. The S&P 500 went below its 200-day moving averages, and then on a Monday, the Dow gapped down 1,000 points. And that move represents the start of a new bear market. And me and you talked about this coming, or a new bear market coming, all year long. And we talked about the signs that would happen, such as the deterioration in the internals of the stock market, meaning that only a few stocks were still going up and most of the market was actually weakening starting at the beginning of the year. In July, when the NASDAQ made a new high, it was only about 20 stocks in the NASDAQ that powered everything up, while most stuff was not doing well. And that's always been the precursor to a bear market or a big drop, and now here we are. And the thing about bear markets are one of their characteristics is wild volatility, big swings down and up, because what happens is when stocks fall, they tend to fall faster than when they go up in a shorter amount of time. So if you think back to the 2008-2009 bear market, the stock market crashed in 2008 in about 2 months and took back all the gains made over the previous 4 or 5 years there. And now, in the space of 3 days, in August, we saw the stock market take back all the gains made in about 12 months. Now, we're above that 12-month low, floating above it, but volatility is the norm in a bear market. Stocks fall faster than they go up. However, in bear markets, they also have big up days that lead to nowhere. They're fueled by short covering and a desperation on the part of people that are losing money and doubling down to try to make up their losses or going on margin, doing crazy things. But there's days that are up lead to nowhere, and they just go up 1 or 2 days, you turn back down, and that's characteristic of bear markets. These days are traps to be avoided, and that's all we've been seeing the past 2 weeks, and so far this month is characteristic of that. But I think we're going to continue to see these up and down crazy days with the market really boxed in a range of about 1990 on the S&P 500 with support around 1880, probably for another couple of weeks. But I think this is just the danger time, and the people that buy in this are going to end up trapped by the end of the month or next month with the market going lower. And I think then we'll see another big sell-off.
Why do we still have people saying this is a great time to get in? Look at the increases we have in the market on a daily basis.
Well, the thing about it is this stock market, if it falls again, the people that are invested in the market, people make money off of them. They got brokerage accounts, they own mutual funds, and people are making money from that. People go on margin, they got to pay interest to their brokers. So a giant, the whole industry of the stock market giving advice or having, managing money or having, brokerage accounts. If the stock market falls again, that industry is really going to be damaged. Because a lot of these people in the stock market now, they're not, if the market falls again, they're going to get out forever. Now, a lot of these people held in the last bear market and did not sell, even though many people did. Many people did, in fact, sell in 2008, 2009, 2010. The statistics show that a lot of people actually got out in the market and put money in money markets, but they never got back in again, those people, because they needed to spend the money. The way the economy was, they just couldn't afford to take any risks. And a lot of these people, when you get to retirement age, you can't risk losing everything you own. But what's happened is many people did stay in the market, and they've seen the market go up, and they think that they made the right decision. However, if the stock market goes into another bear market similar to the last two with big losses, these people, for the most part, they're over 65 years old, and they can't really afford to, hang on there, watch things fall for 3 years or something, and then hope it goes up for 5 years and they make their money back. It just doesn't make any sense. So it's a huge segment of the people in the market. Really, they are the market, and they're going to be gone, and that's going to impact the ratings on CNBC. The average viewer is up in their years on that channel. It's going to impact the earnings for brokerage companies, for investment advisors, and all these people know that in the back of their mind at least, and they know what that means is this bull market that's ended is going to really flip the tables on the entire Wall Street brokerage houses and everything, and people don't want to admit that, and they just it's stuff that they're lying to everyone when they say the market's going to go up. They want to believe it. They want to believe that themselves because they know if it doesn't, they're going to be in big trouble too. It's not just the person in the brokerage account that's going to lose their money, but it's the person advising it who's going to lose a client, and they're trapped. They're trapped because if they try to be cautious and tell people to get out of the stock market, then these people are just going to close up their accounts and buy gold or silver or do something different without them. They don't know how to protect people's money. For the most money managers really don't diversify people. They just think, well, we'll stick you in bonds and stocks. Now you're diversified. When you got to really own a whole mix of asset classes and the type of environment we're now entering, and they just don't have the experience or the know-how to do that. So it's just a big mess, and it's really going to change everything over the next couple of years. Now, there'll be bull markets somewhere that'll start. I think gold and silver will go into a bull market. That'll benefit Vancouver, the brokerage houses around there, and so forth. But that's not the mainstream. And most of the people in the market now, they're going to lose so much of their money they won't even try to profit from new bull markets elsewhere. But that's why we got your show and the House Street website and so forth, because it hopefully, people like me are on top of things too, because this is what we got to do. We got to change, what we've been doing the past couple of years if we want to keep making money, because the stock market's dead. The game's over. The Dow fell 1,000 points, and now we're going sideways, way below the 200 and 150-day moving averages, and we crack the lows again probably. I think it'll happen by the end of this month or next month, and it's just going to be a total disaster. One leg lower, and you're wiping out the bet that a whole generation of people in the United States have made on the stock market, and that bet they've made is on the assumptions the stock market will never pull back forever, and therefore they think what we're seeing is just a correction like in 2010 or 2011, and they're holding. In fact, I just looked at data this morning from Ameritrade that analyzes all their millions of customers, and it's common sense knowledge that when the corrections happen, they end when people get out. They sell on the bottom, and then the market goes up. Well, incredibly, last month when the stock market dumped, the individual investors on Ameritrade bought stocks. They didn't sell. So they're trying to hold. They're trying to hold through this time. They think they're holding and being strong by doing that, but they're not recognizing what's happening, and I think they're kind of trapped in a desperate situation, and they need to get out of it, because I think if people get out of it before the market falls more, or invest and move their money into something different, then they can do well in the long run, but most people won't, and it's just, all I try to do is just have the hope that some people will listen and they'll be around to keep doing stuff that I've just kind of have to mentally write off the general public at this point, because this is really, I think, a turning point, and what can you do about it?
Well, when Black Monday happened, I said to all my friends, they're all shocked, they're phoning me saying, Jim, what's going on? I said, well, if you'd been listening to Mike Swanson and most of my other guests, you would have known this was about to happen. The only thing that was different is it happened about 2 weeks sooner than we thought it would, but it wasn't like this was a big surprise to me, and I wondered why everybody was panicking. But as you said, they like to listen to the people who are optimistic, even as the big cloud of destruction is descending on their heads.
Well, yeah, it did. It certainly took me by surprise too. I had, I wasn't expecting the Dow to fall 1,000 points one morning. It's so crazy, but it's what happened. And yeah, I will tell you this. In 2008, in January, there was a Martin Luther King holiday where the market was closed, and I thought we were in a bear market, but I bought stocks on Friday, and the market was going to open back up Tuesday, and everything overseas crashed over the weekend. And the Dow futures were down 1,000 points, getting ready to open like that Tuesday morning, and I thought that could cause a crash. And the Fed came in and they lowered interest rates and made the market go back up. So I got out, and I took it very seriously. I really thought if the Fed hadn't done that, I was going to lose a lot of my money, maybe even half of it. But that event made me wake up to how serious that bear market was, and I spent a couple, 3 or 4 days doing nothing but reading articles and trying to figure out what was really happening, and I read stuff showing how the banks were in trouble and all this, and it was, all these things were, and it is very bad, and that made me understand that there was a real danger of a crash happening that year, and it did. The point of this story is that I think the drop on Monday, it took me by surprise, and it took, as you said, the people bullish on the market certainly by surprise. But this drop should be a wake-up call for everybody to figure out why it happened. And I think what it means is that this bear market is starting out differently than other bear markets that we've had in our lifetime. I mean, a big drop immediately off the high suggests to me that we could see more big drops on the next leg down too. And it could go lower. I mean, I was thinking the market would fall 35% or something. That's the historical norm for a bear market, but it's made me wonder, is there really something more serious wrong we don't know about? Could the market even fall like it did the last bear market? It's possible, but the bottom line is it should really be a wake-up call to all of us to make sure we understand what's happening and spend time now to figure out what is going on and what the trends are in the market and really take things seriously about it. And you got to do your homework to do that. And that's what people really need to do. I mean, this is really, I think, a key moment the next couple weeks. And most people, are just kind of, I think, frozen, just kind of they're nervous, but not scared enough to sell, but they're very nervous about it, but they're just hoping that it'll go back up. But you got to do more than just sit there and hope every night or something. You've got to be ready to figure this out and make changes if you think it's necessary. And I think it is necessary.
Well, a crisis planning expert told me once, hope is not a plan.
No, it really isn't. And I'm, I think everyone at one time or another has lost money in the financial market, the financial market. I mean, I know I have it in the past, but you learn from that. Everyone, maybe people listening, some of the people have lost money in 2008 or 2000. I lost some money in the gold stocks because of this last bear market. But the thing is, and that's where you learn how to make changes and make sure it doesn't happen again. And when the market goes up, like the stock market did for a very long time, people start to think they don't have to do anything, that it'll just go up forever. And that clearly has come to an end. So it's certainly people should, I mean, if this doesn't wake people up, I don't know what will, unless it's too late for them.
We'll have more with Mike Swanson after the break.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel in Oliver, October 2nd, in Kelowna, October 3rd. Buy online and save at ontourtickets.com. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. Mike, how come people are betting on China to come up with some kind of a stimulus program again? Because we know that just delays the inevitable and essentially robs the people of all the tax money they've paid into their government over the past year.
Well, it's just people want to believe that there's some way to stop this mess going on. They just want to believe it. I mean, what we've seen this year is the stock market in China crash, and the Chinese government repeatedly come up with schemes and programs. They even announced a quantitative easing thing, which, people in the United States is associated with miracle gains in financial markets, and it failed. So it's kind of silly to think that they're going to come up with a stimulus program and that's going to work. I mean, my goodness, we've seen what the stimulus program in the United States under Obama was about, accomplished. It didn't seem to do very much at all. So I don't know. I just think people want to believe that, just to grasping at straws. But in the end, I'm betting against stocks. I should say that. I mean, I started to do that in July. So I'm someone that is betting against the stock market. However, I have long positions too. So I think, I'm diversified and not just betting one way. And I do that. One of the reasons I do that is because I want to try to be as objective as possible. And by having some long positions, I have an incentive to also want the market to go up too. So I don't want to just be in a position where I want to just believe one thing because I need to believe it, which unfortunately is the position almost everyone you see on television talking is in. They need to believe the market's going to go up because that's how they're positioned. That's how their whole business operates. So they just look for data and reasons to confirm that belief system. But in the end, I think anyone, even if they have long positions, all they have to do is take on some short positions, and they can hedge their portfolios. They can buy put options with just a small amount of money and accomplish that to cushion any losses that occur. And I do think out of this mess, at some point before the year's over, we'll see new bull markets probably in commodities, in gold, in precious metals start in particular. I don't know the exact timing of that, but there are ways, to profit from all this too. But in the end, despite how I sound, I'm sure some people think this sounds like a lot of doom and gloom. The reality is that the irony is that bear markets actually create the best opportunities to make money out of the financial markets because they give you a chance to bet against stocks that go down faster than they go up, and they give you a chance to buy stocks cheap when the bear market is over, and they give you a chance to buy into sectors or other markets or other asset classes, as I mentioned, gold and silver, that break away from the bearish trend in the stock market and just take off. So in the 2000 to 2003 bear market, gold and silver started new bull markets. They actually bottomed in 2000, but they started new bull markets in 2002, and the mining stocks went up over 100% from their low in 2000 to their high in 2002. I think it was like 300%, or it may have even been more than that. So there are opportunities to make money. The Russian stock market also went up tremendously in that bear market. And in the last bear market, the bonds went up tremendously. And everything else pretty much did fall, but some stuff bottomed out ahead of the U.S. stock market bottoming in March 2009, and it went up quite a lot. The Chinese stock market, in fact, did that. Gold and silver did that. So, the big swings we see every day, people see that they're enticed to try to buy the stock market when the Dow goes up 300 points and they lose money the next day. But in reality, the volatility creates better opportunities to make money outside of that manic type trading. And so it's actually an exciting time, but you got to do the homework to take advantage of it. And that's not, the average person that's in the stock market, they just don't do anything. They just got their money invested in some fund, and they just sit there and think, oh, it's going to go up, it's going to go up, I want it to go up. And they don't care about anything. I mean, it's all they have is this belief system. So it's really crazy, because if you look at that cyclically adjusted PE ratio, the stock market is overvalued a few months ago as it was in 1929. and in 2000. So for someone to be in that position, having ridden things up to there, at some point you got to take your profits and say, this is overvalued, and the upside potential really isn't there. So the people who remained on that gamble were basically betting that the stock market wasn't just going to go up like it did in 2000 as far as valuations, but go up even crazier. It just doesn't happen like that. At some point, valuations do matter, and we're starting to enter that. I mean, all we saw was the Dow fall 1,000 points in 4 days, and now we're trying to, bounce, and we're in this range, and we break down, and it's just going to, the hole's going to drop out. But that's all we've seen happen. The market fell for 4 days, and now we're in this range. And it's just been, it hasn't even been a month. So we're only 1 month, not even 1 month into this bear market. So it's going to be something to see how this unfolds in the next couple of years.
Well, as that Chinese saying said, may you live in interesting times. Yeah,
we certainly do. But I got it's quite amazing. I don't know what things will be like over the next couple of decades. They say China. Some people say China is going to be a superpower to compete with the United States. And when I was born, Mao had just died, and there's lots of starvation there, and the whole place was a hellhole, really. And now it's I don't know, it's chaos there now, but who knows what it'll be like in a couple of decades. And we saw the internet bubble, we saw the housing crash, and now we're entering some other type of crazy time that'll play out, and there we are. I mean,
well, will
the madness never end?
I was going to say 12 years ago, China had no billionaires. Now there's so many, they're trying to snap up every sizable piece of property they can find in Vancouver.
That's crazy. Well, one of the funniest things I read a couple of years ago was that they were hiring people in the United States to go to China, and they would pay you like $100,000. And all the job entailed was pretending like you were a board member of one of their companies. And you would just sit on there and do business meetings with them, but you wouldn't have to talk. You just sit there as like an actor. And this way they could say they had Americans and connections over here and doing stuff like that. And they'd pay these people $100,000 a year to do this.
Well, I saw a Vice documentary where that's exactly what they did. They followed Caucasian actors who pretended to be doctors, scientists, researchers, investors, and they would just show up, sit there, on the podium and smile. Yeah.
And it's that's it. It's something. And where I live, a Chinese fella came in my town and didn't speak any English. He had an interpreter with him and paid $15 million for a manufacturing facility. That's this guy who does something like that. It's crazy.
Well, so often appearances are not what they seem to be. Watch any reality show.
That's true.
And I would say the stock market is the ultimate reality show.
Yeah, or a casino, or both. I guess it's a mix of both.
Yeah, you might have better luck putting all your money on red. Thanks a lot, Mike.
Well, thank you. It's good to talk with you, as always.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.